So today I'm going to talk about a new UK stock I have started buying. I started buying this stock around about 2 weeks ago, and I thought it's about time I update you guys on the YouTube channel that I have been buying this stock. So you guys on the Patreon, you have known I've owned this for a while, but for you guys on YouTube, I'll give you a bit of a detailed look into why I have been buying this stock. So I hope you enjoy this Sunday video, guys. If you could, hit the like button. If you're new around here and you like the content, subscribe, and we'll get started on this UK stock. Now, like I said, you guys on the Patreon know I bought this stock around about 2 weeks ago, so if you do want to know what I'm buying and selling in real time, join the Patreon. Links in the description. It's £5 a month, the price of a pint. You support the YouTube channel, you get a Discord with 500 members on to talk to about stocks, including me, and you get 2 exclusive videos a week on there. We have just done a stock request on Eurocell, which was quite an interesting stock, and it's about a 25-minute look on Eurocell and plenty of other features as well. So for £5 a month, if you do want to support the channel, the link is in the description. Now, as you can see here, I did buy this on the 3rd of June. So I had to blank this out because this was another stock I added in. It's not a new stock, one I already own. But you can see here, I did buy the new stock, which is Warpaint. So I did buy into Warpaint, which is a UK growth stock that's been on my watch list for a good 12 months. And I finally got around to buying it. Now, like I said, I did buy this a couple of weeks ago. So I am up around about 15% on my position since I did start buying Warpaint around about the start of June. But however, it still had a cracking year. It's up 52% year to date and has been a very good performer on the UK market, as you can see here. It is 32 times earnings, so it is a little bit rich on the P ratio, but when you do look at the growth, you can see why it trades at a bit of a premium. And it's also a dividend paying stock with a very good growth in that dividend as well at 1.5%. Now, realistically, I should have bought Warpaint a long time ago. I used to own a company, as most of you guys will know, Revolution Beauty. So when they had a lot of account issues, I started buying this stock and I thought, actually, this is a pretty good makeup brand at a very good value here. There's a little bit too low now because of the fears around the account issue. That stock proved to be a very good winner for me. I ended up selling the stock for just short of 100% return, and it did absolutely amazing. Now, I said to myself, when I sell my Revolution Beauty position, I will go buy Warpaint. I just never did it. Now, unfortunately, I missed out on a very good return there, and I would have been up a lot on this position if I bought it when I said I would. I never did. And eventually I was re-looking through Warpaint's financials and I went, this company just continues to smash it. It's a very good growth UK stock, which we don't have many on the UK market. And what I can see here with the US growth potential they have, I think in the next 5 years, is it going to be higher than where it is right now? And I ran the numbers and I thought, yep, I see 100% upside in this business. I'm going to go buy the shares. And I should have done it a long time ago, but at least I'm buying now. And hopefully I make the money up in the next few years and make some money from it. Now, I'll also let you know that they are going to do an AGM at the end of this month, and also we probably will get a trading update. So this information could go out of date very quickly, but I just thought I'd let you know about that. But Warpaint itself is obviously in the cosmetic space. It's a makeup brand, which is a very big growing area at the moment. And you can see it's growing at an anticipated rate of 6.85% in the United States, which is one of their areas they're looking for to go for the growth. And they have a couple of brands, or a couple of makeup brands, as you can see here. Now, most of the revenue comes from the W7 brand, which most of you might have seen your missus is buying. There might be a few females here that are watching this video as well, and you will definitely, I think, will recognise this. But for most of my male audience, which I would say is about 90% of you guys, you might see your missus buying this brand here, W7, and I know myself, my missus is a very big fan of this one. This is one that I would say she buys the most of, followed by Revolution Beauty, funny enough. But yeah, so most of the revenue comes from this W7 brand, which makes up about 98% of the company's revenue. The rest of it comes from Technique, Body Collection, Man Stuff, and Chit Chat, which is like a earlier age kind of bracket makeup brand, but W7 is the kind of main contributor of the revenue for this business. Now, an introduction to Warpaint is that they sell high quality branded affordable cosmetics. So we've seen the cost of living crisis at the moment. People want more affordable things. This is one of the reasons why Warpaint has done very well. Now, what they do is they sell quite often what they call dupes. So what happens is the higher end brands, like maybe like Elf, for example, or other brands that are higher end, they are basically the trendsetters of makeup. And then what happens is there's a few companies lower down that will try and do a bit of a copycat version of that trending item, but they'll do it for cheaper. And Warpaint do that. And then what they do is then they do their own branded stuff as well, which people realise, hold on, I use Warpaint for this dupe, I actually think their stuff is actually high quality for the price, and then hopefully they transfer onto the other brands as well. Now, most of it was based in the UK, but they have started to expand a lot more internationally, and you can see they currently have a team of 140 based in the UK, US, China and Hong Kong. They outsource all of the manufacturing as well, so they're an asset-light structure, and they are very profitable, cash generating, and has a strong balance sheet, debt-free with a dividend-paying company as well. Now, if you look at the recent 2023 financial highlights, they were absolutely exceptional, and that's why the share price has performed amazing. Revenue up 40% year over year, gross margin up 350 basis points to 39%, which is a good gross margin for a company like this. Profit before tax up 135%, and once again cash and no debt, and that was up a very healthy amount as well from the last financial year that had just come off. When we look at the operating highlights, we can start to see the growth in the other areas. So you see the UK was up 18%, Europe was up 61%, US was up 37%, and rest of the world was up 57%. So the UK is a bit more of a mature market for them now, and they're trying to push into those other countries, and it is having a lot of success, and that's what's driving the growth up as what you can see here. W7 brand was up 64%, the Technic brand was up 21%. They have landed more customer expansions, so they have launched into more Asda's, Nordstrom's, Superdrug, and expanded the current locations they do have by offering more products as well, like Tesco for example. So they have expanded the client base and been landing a lot of new clients as well, which is really good to see. I'm not going to go through them all, but if you go through any of the annual reports, the trading updates, you'll be able to get a lot more detail on the ones that are expanded into, and also the new ones that they have managed to get, which is like Walmart. Walmart was a recent customer they got, which obviously gives them really good access to more locations as well. E-commerce as well is growing. Direct to consumer online sales grew 121% as well, which is obviously very impressive. And if you look from their pre-IPO levels to the growth they have been doing over the last few years, they've got a history of very good growth as well at the moment going forward. Now, obviously they were more heavy towards the UK side of it. They've got good market share in the UK, which is around about a 1.8 billion industry for these guys. However, the US market, which they've started to enter, is the big market. So it's 10 times the size of the UK market, 18 billion. And that's where the potential is now to go land some more growth in that US market and see how they do very well. You can see the market size is roughly about the same, with 2/3 of women using colour cosmetics daily. But you can see here that 79% of the UK market think the price of a product is important selection criteria, whereas the US is a lot less, which is obviously another very positive. And you can see that also in the US, they also think that the affordable brands perform just as well as the prestige brands, which is positive information that we see here. And obviously a sign of that they're going for that US market even more is that they have actually launched onto the OTC market as well, which obviously will hopefully bring some investors in as they see the growth in the US. I think ultimately we might see Warpaint acquired by a US makeup company. We'll see what happens, but that's also very good progress that they've made here. Now, like I said, they actually started as a discount retailer, but they have now started to enter more supermarkets in the UK. I think the first supermarket they ever got was Tesco's, which was in 2020, and they started off in a few stores. They then expanded more and more stores, and now they've also got the likes of Superdrug, New Look, Morrison's, Boots and Asda. Also, when we look at the US, they have done exactly the same basically in the US market, where they've landed a product, slowly expanded it, and then copied that model into more and more retailers, with the recent one like being Walmart for example. And you can see here that the growth of the online sales has done very well. But on the US side of it as well, they only operate through Amazon, and in the EU they only operate through Amazon, where as you can see here that mostly a lot of their online sales in the UK actually come from the W7 actual website. Now, the Q1 up trading update once again was very positive. You can see here group revenue was up 28%. Q1 margins ahead of financial year 2023, with once again more economies of scale and obviously lower cost as well. More expansion agreed with the likes of Walmart, for example, launched Technic into Morrison's, as well as additional in CVS, Boots, Five Below and Superdrug stores. And once again, strong online sales, and saying that they are confident they're going to hit the rest of the targets currently going forward. Now, if you do look at the current growth targets, we are expecting revenue to still grow at very good rates, as you can see here, which is what we want to see. Profitability hopefully carries on moving in the right direction as well. And I think we'll get to the point of view where in the next kind of 5 years, by the time we get to 2028, I think we will see the profitability doubled up on this business with that EU growth and also the US growth. Obviously, the way that will happen is that then we'll have a better better balance sheet, I believe that will also lead to a bigger dividend as well going forward. Balance sheet wise, cracking balance sheet, there's no debt on the balance sheet as you can see here, and cash and equivalents wise, they sit on 9 million of cash, and obviously every year they're going to be throwing off a very healthy cash amount. By the end of this year they should be throwing off about 17 million once again, which will then obviously lead to a dividend that's been hiked up as you can see here, that's gone up more and more, and it's quite an easy dividend for them to cover because it's only paid out of a 50% to earnings ratio, so that's really healthy. The only negative that I really see at the moment that's come up in the last kind of couple of months is that insiders have sold, so the CEO did sell a good chunk of shares as you can see here, but at the same time you do look at the performance of the stock, and for someone that probably would have been a big shareholder during this time frame, I think we all would have released some capital during this time frame, so I wouldn't really take that as a big negative here that he has released some capital after the shares have performed absolutely amazing. But overall, look at the current valuation, which is by the end of the year, by the time they close off the financials, will be something like 24 times forward earnings or something. I think 24 forward times earnings for a company that's probably going to be growing high 15-20% with the profitability side of it, the growth in the US market and the EU market, a very good balance sheet, that dividend that's probably going to get hiked up as well. Yeah, I thought Warpaint was a good time to kind of pick this stock up. My only big regret with Warpaint is that I didn't pick it up earlier when I said I would after I saw my Revolution shares. I should have bought Warpaint, but I look at the current guidance they're offering and the trading updates, and trading still seems very strong. And with the cost of living crisis that we're having at the moment, I think that affordable makeup will only continue to grow with the likes of Warpaint at the moment. So yeah, a really good UK growth stock that I think is doing very well at the moment, and even though the share price has run up a little bit, I still think there's a bit of upside here in the next couple of years as that expansion goes on. So I just thought I'd update you guys with this buy that I have made on the UK market, which is Warpaint. I hope you enjoyed the video. Let me know what you think about Warpaint in the comment section, and any UK stocks that you might be buying at the moment as well. Always interested to hear what you guys are buying. Have a great Sunday. I might see you on Monday for a video. I'll see if there's any big topics that kind of come up over the remaining couple of hours today, or if there's any headlines that do come out on Monday. But apart from that, have a good rest of the weekend, guys, and I'll see you all in a bit.